All right. Hello, everyone. Charles here with Slick Trade. All right. I just want to make sure that the video is recording. There we go. I used a little bit different service. Had to restart my computer. So trying to do things a little different way. So today I'm going to cover our market commentary for the upcoming week. Now, last week I did do a video. Like I said last week, I know a lot of you just prefer the post with the key levels, breakout points, all that. So you can just kind of copy and paste into your MetaTrader 4 and just have that screenshot visual, which I'm still going to provide to you. But every now and then I'd really like to throw in a video because I feel like even though there's only a couple of you that really prefer the video, it is something that is valuable to a couple of you. So I feel like I should continue to do it. I don't mind, and I have to set this up either way. So why not just record and talk while doing it instead? So I hope you guys are having a great week. If you're new to the room, welcome, and thank you for becoming a Slick Trade member. I hope you get a lot from your subscription, and if you've been with us for a while, I would assume you are getting what you'd hope from your subscription. So right here we've got the NU. This is the New Zealand dollar, and I have loaded up the professor template. I did notice when I downloaded the new MetaTrader 4 here that the supply and demand didn't come through on the template. If that happens to you, like this, if it shows up like this, and you want to have the supply and demand showing, hit your little navigator icon over here and go down to your supply and demand indicator. Go ahead and just add it with default values, and there you go. If you want it to come up every time you pull up the professor, you can save a new template. So you go to template, save it, and then you can save it under a new name, or you can just overwrite the existing professor right there. So there we go. So this is New Zealand dollar. This is the 4-hour chart. I already mapped out last week's key breakout levels, and what happened was price broke to the downside at first. Okay, it only went up about 20 pips into profit, and then it went against us. Okay, so this as far as the market commentary results has a negative 40 pip result from last week. Now, if you are, oops, just want to write this down so I have it for my records. Okay, if you trade both sides of the breakout, then you would have gained. On this side here, if you trail stops, you would have got yourself about 50, 60 or more pips. Okay. With that negative 40 from the downside, the original breakout, well, you'd be up 20 pips. That is not the way I personally trade it, but that is a way that I know some of you do trade it. So, cheers if you took that. If not, we just had a small 40 pip-ish loss. So, not too bad either way. For the upcoming week, so as you can see, we're in some sideways movement here. And the previous week had gone to a bit of a deeper correction phase, came down to our, well, a little bit below actually our main support, but as you can see, it's right here in our zone. And just mark this here and here. Okay, so here's our zone right here. And then price kind of headed back up. All right, so I like to look at this as a consolidation period, okay? If we take a look at the daily, you can see the same thing. Now, these were the key levels that I sent out last week, And as you can see, we came down, bounced off, and then kind of headed back up, but we are still within those key levels. So those key levels are going to stay the same for this upcoming week, okay? As far as the 4 hour is concerned, our new key levels. Remember, when I plot out the week, I like to look at roughly a 50 pip range, okay? Sometimes a little less. There's 40 pips, okay? So that's a nice range right there. As you can see, price was really pushing, kind of lost momentum there in those last 8 hours or so. There we go. Wasn't letting me delete that. Okay, there we go. Nice clean chart. These are our new levels here. Like I said, consolidation. In a consolidation period, as far as the daily is concerned. Now we could have a deeper correction or trend reversal in the upcoming weeks. All right, sorry about that, guys. Had to pause the video there real quick. So consolidation period, as far as a deeper correction or trend reversal in the upcoming weeks on the daily. Yeah, same thing. Just wanted to double check. Take a look at that. Okay, those are still our same key levels. And as far as the 4 hour, I think I already copied that, but sorry, I got interrupted there for a minute. I want to make sure that I move or get all these levels in here for you. Okay, so there's NU. Nice plan. Following suit. Looks good. As far as daily is concerned, we're still technically in an overall long trend, but like I said, we're in that consolidation. If we break to the upside, we definitely continue up to around here. The 0.73022 level could continue beyond that if we are in continuation. We could see a break to the downside. If we see that, then you could see it come around the 0.70491 level, and at that point we can take it from there. If we go below that, then I would expect the deeper correction option to the potential, not option, 0.70030. If it breaks below that, then I'd say trend reversal all the way. So that is NU4. Grab a screenshot for you guys. And daily. The Aussie dollar. All right, so 4 hour key levels from last week. Oh, that was weird. Those were our levels from last week, and right there was when the market commentary was released, and we broke to the downside as well. Here, though, we did move up. Oh, whoops. We did move up those 25 pips, exactly 26 pips, okay? So if you had a tight trail, then you either broke even or gained 25 pips. If you stop at 25 pips or manually trade it, then you more than likely grabbed your 25 pips. If you trade both sides, then you would have gained from both sides. Again, I don't personally recommend that, or personally trade it that way, but I do know a lot of you do trade it that way. So either way, we got our first take profit level, which is that 25. For the upcoming week, we got the same kind of thing going on here. We've got sideways movement or a consolidation period. So if we switch over to the daily, you're probably just going to see, yes, consolidation. Okay. So for the upcoming week, our levels really aren't going to be that different. We're going to move up a little bit here to the upper wick on this candle. And we're going to move this up a little bit closer to the lower portion of the bodies of support level here. Okay, so really not that different. Price is kind of making up its mind on what is going to happen. Okay. There we go. As far as last week on the daily analysis, overall long trend, that still is holding true. Okay, we are still in a long trend. The key levels from last week, they're in consolidation. Yeah, we're still in consolidation. Here we go. It's our upper key level and our lower key level here. Okay, see, we're still within that range. Okay, so those key levels will stay the same. Yes, it's still consolidation. If we have a break to the upside, I would definitely trail it every 25 to 50 pips. Keep an eye on the 4-hour time frame, and keep an eye on that 4-hour time frame and trail your stops, protect your profit. Okay, if it goes down, breaks below that key level, then we can expect price to head to the 0.76185 level, potentially to the 0.75581 level, and then if we break below that, we may be looking at trend reversal or deeper correction. Okay, so that's the plan for the upcoming week. I'll grab a couple screenshots for you guys here to put in the post. You see, this is the dollar franc. So last week, these were our key levels. Here's where we released last week's, and we broke to the downside. Okay. Our initial move was here, 26 pips, you would have grabbed your 25. If you trail and move to break even profit, then you would have gained your 25 or broke even. It depends how you trade that. If you manually trade, you potentially got your 50. So just kind of depends how you trade these. But as far as results go for the market commentary, I'm only putting 25, okay, because that was that initial move, and I personally do manually trade, but I also protect my profit, okay, so would not have gained that full 50. As far as the upcoming week, we're in the same scenario. Okay, price is in a consolidation period. Now, we do have some new key levels, which are right there and there. Okay, but overall, we are still in a short trend. We have not turned around yet. We do not have the go for a full reversal, but it could be in the upcoming weeks. We will see. So here are our new key levels. You see on the daily, currently in a consolidation period. And our key levels for the daily were here and here. Okay, now we did have a break with candle body. That was right when the market opened, and then we kind of headed back down. So our next key level here, this support, it is still holding. I would watch that though. If you happen to get in this trade, then I would watch this 0.88489 level as far as protecting profit. If I was personally in this trade, my stop would be down here at the bottom. But remember, this is daily, so everyone has different tolerance as far as your account size and all that, okay? And how you trade it, what risk you use. If you are a riskier trader, then, well, if you are not a riskier trader, then this may be pushing your stop loss, okay? But just know, oh, that's not that much, 65 pips on the daily, that's really nothing. So this range right here, 138 pips, okay. So if you are a riskier trader, then your stop loss would be probably down here, okay? Me personally, I'd be really watching, I manually trade these, but I'd be watching the candle body around this point. If it broke and the candle body held below, I'd just be out of the trade. But we will see. We're in a consolidation period, and I'm keeping those key levels the same, okay? That one bit right there, that was such a small move. It was still really at that resistance level because we have a range, and that range would be from here to about here at the top of this candle. Okay, so just watch that. These are some nice key levels for you. I'm going to keep the main key levels the same as far as the daily. Grab a screenshot here for the post. All right. The euro dollar. Key levels from last week on the 4 hour. All right there. We did have a nice break. We had an initial candle break here, and then a beautiful shot to the upside pretty quick. So you should have gained at least your 50 pips out of that, depending how you trade it. This was our initial move up of over 50 pips. If you protect your profit, you'd be out of it after that move down. If you just manually trade and you kind of let things run, you could have gained up to about 88. As far as results for market commentary, it will only be the 50. Okay. far as the upcoming week, so price has rose above our Hull moving average here of 200, barely. Okay, you can see the resistance pushing back at this level right here and this level here. This is our little range. Okay, so we'll see what happens. Okay, as far as new key levels, we could definitely be looking at trend continuation to the upside. This could have just been a deeper correction, but we will see. We'll see what the market delivers. Okay, I'm actually going to put this here. Let's see what this range is here. Like I said, I really like to keep it around 50 or less. Oops, 52. Pretty darn close. There we go. Nice and even. Here are our new levels here. Okay. And then as far as the daily is concerned, we were in a consolidation period. We were expecting continuation of that consolidation or a deeper correction phase with key levels here. Okay, so we're still within those key levels. Those key levels are just going to stay the same for now. Okay. That's about it. There's really nothing else to say about that. So we'll see what the upcoming week delivers. Okay. GU, okay, this is the pound dollar. I talked about this last week. I'm potentially removing it from market commentary just because it's been a bit volatile, especially when you look back here. There's just a lot of jagged movement. It's not nice and clean. It is following suit. It is following a pattern. However, it just hasn't been as solid of a pair. Or as clean looking as a pair of a pair, I guess. Okay. And we really kind of continued that here. If you wanted to trade this, I'm avoiding trading this right now. I think it's just a little too volatile for my liking. Okay. It's been delivering. It's been a solid pair. We've had it in market commentary for a long time. Just been kind of iffy about it lately, and maybe that has something to do with COVID. So here we go. This was it. See, we had our initial breakdown, and again they had this pin bar, and it shot up and just continued on up. I mean, you would have got your 25 pips out of that. But that's about it. I think I'm just going to go ahead and remove it for now as far as at least on the 4 hour. Maybe we just watch it on the daily for a bit. I think that's what I'm going to do. So that's what I'm going to do. I'm going to go ahead and just remove that from here. Okay. But I'll keep it in the daily. We can keep an eye on it. And if it starts to clean itself up, then we'll go ahead and put it back into the 4 hour as well. So overall long trend, true. Currently in a consolidation period. Which we broke a new high, but I don't know if it, yep, it broke our level here. So we are broke out of that consolidation, but it is experiencing some resistance. So watch it. If you're trading it, it is in an overall long trend. It is continuing up. It is following suit as far as creating higher highs and higher lows. Okay. This is a beautiful setup as far as daily is concerned. Okay. However, we're getting less and less momentum each week. And this area right here was very volatile, okay? So protect your profit if you're trading this. Buy on dips, you know, and just kind of watch, all right? I would say a key level, if it really honestly, if it breaks below this 1.34988 level, then I would be watching for it to head down to 1.34116. Okay. As far as new key levels, haven't been up this high in a bit. So the last time we were even to this level was here, and that was 4/27 of 2018. Okay. So if we break above this 1.37533 level, then you could expect price to head right. Yeah, that's the upper portion of that to the 1.37929 level. But watch it. We've been having such an abrupt move up here. Okay, I really think we're going to see a correction or deeper correction soon. Just protect your profit. Okay, trade it wisely. Use proper risk management if you're trading this one. Okay. And here are our new key levels for the upcoming week. Actually, I think that was already, yeah, that was already your key level. So that's about it there. And then I will take a screenshot for you guys there. That's really about it. Market's moving good as far as the other 4 pair we've got going. And if you're using proper risk management, you should still be profiting well each week. This last week was kind of lame as far as profit. I mean, really, if you just did the first 25 pips with the trail stop of 25 pips, you would have gained about 85 pips last week. So still not bad. It's profit is profit. You know, you're going to have losses, you're going to have gains. But for a lot of our recent market commentary, we have been gaining a lot more than that. Okay, usually a couple hundred or more pips. So that's about it. If you guys have any requests on things you're not understanding in the room, setups you're not understanding, if you have questions about some of the basics even, you know, support and resistance, things like that, let us know. And I'd be happy to create some new videos. So that's about it. You guys have a good one, and I will see you in the room.